We're going to begin today with a little seminar about going to the next level as CFO. And I can't think of a person who would be better to do that for us here today than a person who has done exactly that. Not only did Mike move from the CFO role in one company to the CEO role at DirecTV, he moved from one industry to another, which shows the kind of versatility that the CFO has in this world. So please welcome to the stage to talk about going to the next level, DirecTV's former CEO, Mike Waite, and my friend and colleague, Carl Quintanilla. Carl.
Hey, T. Thank you.
Thanks, Tyler.
Thanks, guys. Good afternoon. Mike, it's great to have you. What a treat for us.
Nice to be back.
And as Tyler said, it's a great chance to start the afternoon talking about career.
Yep.
Because as Ty said, making the leap from CFO to CEO is one thing. Switching industries entirely to a much different market is another thing. So let's just lay the groundwork for your time at Pepsi, for instance. You're CFO of multiple layers of Pepsi or Frito-Lay for years. From 2003 to the time you left, total sales outside North America, and you were largely international, went from less than $8 billion to nearly $20 billion. Were there steps that you took consciously as CFO that you felt were setting you up for a move to CEO?
You know, when I joined PepsiCO, I remember telling Mike Jordan at the time, look, we're going to park you in finance. And I said, Mike, I'm the oldest of 8 kids, and I'm not here to be a finance guy. I'm here to run something. He said, that's okay. You're going to go learn the business over here. And then, as sometimes happens in life, other things take a path, whether it's your kids or whatever. And I ended up being CFO of almost all the divisions in the 90s. In fact, last time I was here was 1997 to ring the bell. I think I'm one of the few that's rung the bell both here and at the NASDAQ, because DirecTV traded on the NASDAQ. But so I don't think but by the time I became CFO, I really wasn't thinking that way, to be honest. I just wanted to be a great CFO. And I was fortunate in a couple of respects. First, I had a predecessor who's a Hall of Fame CFO, Carl von der Heijden. And Carl was great about mentoring and teaching me the last couple of years. And Carl and I had to work hand in hand on the Pepsi International blow-up, so I learned a lot about everything from bankruptcy to you name it from Carl. But then I was also Roger Enrico's CFO, and to be that close to, Roger was a very unique leader, master of communication skills, and a strategic thinker. And so you learn a lot about strategy if you just listen and observe. And you have that kind of opportunity when you're working with someone that close. I think the other thing, Carl, that I'm always passionate about trying to understand stuff. I guess I'm just naturally curious. So when I first got there, Peggy Moore, who was my head of investor relations, said, I'm going to take you around to the investment community and introduce you. Now, because I'd been in all the divisions, I knew the physics of the business really well. But this is different now. And I remember the first one was a trial run in Chicago with buy side, because the sell side you learn some stuff from, but you really learn stuff if you listen from the buy side. And I would try and get a little friendly and try and get a little insight into their modeling. Now, they'd never tell you all of their modeling, but I did have one friend I made who showed me all of his consumer product stocks and how he had done a correlation model between growth and return on invested capital. So spending that amount of time with the buy side, if you think about the scorecard for CEO, probably the number one grade you're going to get is as a capital allocator. And I have to say, I think I learned a lot in those one-on-ones that I spent time with the buy side, in particular, over the couple of years I was CFO of PepsiCo. By the way, coming out of that, I developed my own perspective on valuation, and that's when we started the PepsiCo share buyback in, 98, 99.
So you think the overlay is big?
Yeah.
In terms of skill set?
Absolutely. There are differences. You obviously, if you're in a CFO role, you have a hip pocket skill, I call it, of analytical skills, an intellectual discipline you can bring to any business problem. But there are also differences. I mean, so I think going from staff to line, from kind of analysis to decision making is a little different. So I don't know of a CEO who doesn't say, gosh, if I had to do it over again, I would have made X decision faster, and I would have cut deeper or done whatever. I mean, so the decisiveness to make things happen at the CEO role is different. I think I always felt, particularly DirecTV, I need to own the customer. That is, you're always thinking about customer growth and innovation. You don't always do that as much in the CFO role, you're more productivity. And then I think the other thing is inspiring and motivating people, a team of diverse people. I mean, you guys all sat down, were quiet pretty quick. That would never happen at PepsiCO where you had to herd cats, and cats don't herd. But, that takes a different set of skills in terms of how you connect with very diverse people.
Right. Give me an example of your early days as CEO where you said to yourself, well, I've not had to handle this before. We're not in Kansas anymore.
At PepsiCo, I'd handle just about everything. DirecTV was a different kettle of fish. I mean, it's a different business, a different industry. There were some interesting parallels, but there were also some huge differences. So, probably the content negotiations with the media companies. I mean, I'd watched Enrico negotiate, I'd done negotiating, but, that was kindergarten compared to negotiating with Disney or the NFL or, Comcast or whomever. I mean, it's just a different.
Really?
That was a completely different.
Because when you made the leap to DirecTV, the thinking was, well, both industries have big international components in Latin America.
Right.
Both sign big marketing deals. You were no stranger to that.
Correct.
But content and distribution was just a different league.
Yeah. I mean, the branding. We made great ads at Pepsi. I'm really proud of the ads we made at DirecTV. A little sense of humor. There's some parallels there. Latin America, I saw very early on when I became CEO. I said, one of the board members said, I've already told everybody you're going to spin it off. And so I thought a lot about it for about a month or 2 months. I took one trip to Latin America. I know emerging markets. I'd spent a lot of time in emerging markets, and I know talent in emerging markets. I said, no. This is our best growth asset, and we're going to just double down on it from a growth standpoint, which is part of what I gave the street in exchange was I decided to kind of announce $1 billion share buyback program, which also made sense for other reasons. But, I think that when you're negotiating, and you take the NFL, I mean, it's just the leverage differential. I mean, Pepsi, we got used to negotiating with the two clubs, we used to say, and everybody knew it, especially in the Pepsi International debacle, which isn't a fun place to be. I used to say, when I die and come back, I want to, I'd like to run a monopoly or something where I have more leverage, or Amazon or whatever, where I trade on revenue. But I think the negotiating is different. Now, I mean, some of the things I learned, Roger Enrico used to say, and I remember when we did the Quaker deal, I watched Roger, and he said to me, Mike, before I even go into one of these deals, I know what my walkaway is. First rule of negotiating is, what's your walkaway? So you don't get caught up in the emotion of it. And knowing your walkaway means you're prepared to walk away, by the way, and that's an important consideration, too. How badly do I have to have this deal or not? But the other thing, when I was trying to negotiate the redo of our NFL Sunday Ticket contract, which, AT&T had made a big deal about publicly, and I kept telling them, don't do that. You're just going to empower me. Now, I had already covered all my bases with the NFL, and I had built a relationship with Robert Kraft in particular, being from Boston, that helped. And they were Pepsi Stadium, too, by the way. So I had a few things that were helping behind the scenes, but nevertheless, you're not going to get some discount for that reason. You just might get some help in getting to the right answer. But I was going into a meeting with Kraft and Goodell, and I knew you never go into two-on-ones, but unfortunately, that's the way it was set up. And so I had a former coach, executive coach, who said to me, well, put your watch on your other hand. I wear it on my left hand, I'm left-handed, but he So put it on your other hand. It's just enough to throw you off and slow you down in the conversation.
Really?
Which, you've got to control your emotions. In those kinds of situations where the pressure's on, and on the one hand, you got to get a deal. On the other hand, you got to be responsible in terms of the deal you strike.
How do you even come to a walk-away price when you know that the end of Sunday ticket would not be good?
Well, I had a range in that particular case. But I had done a lot of homework. First of all, I laid a lot of track up front. We met with Goodell and showed him the economics and said, when I got here, we were losing X. Now we're losing 3X. Okay, at some point, this is silly. Okay, now it's a fabulous product. Most people don't realize only about 10% of our customers took it. It's about 2 million subscribers that took it, but they're our best customers. Mm-hmm. And it was a huge differentiator and a brand builder. So, I looked at it as somewhat as advertising. When folks came to me and said, well, we need to do original content. I said, we already do. They said, what do you mean? I said, it's called NFL Sunday Ticket, and we're paying $1 billion a year for it. That's our original content. We're done. And so, anyway, we got the deal done.
You've been asked about the CFO, CEO split, the difference. You've said it's not just about knowing how to read a P&L and understanding the business metrics, but having the ability to think strategically. Do you think that's a skill that's common among CFOs?
I think it's more so today than it would have been 25 years ago. There aren't too many CFOs that don't have to think strategically with activists and everything else out there. I was lucky. I spent 5 years at Bain & Company. I worked for Mitt Romney before Bain Capital was founded as a consultant doing strategy. So I had a lot of really good experience to kind of lean on. But I think most CFOs have to be strategic. You have to look at your assets, kind of the valuation of your stock. You have to understand capital allocation. So I had a unique advantage having spent 5 years at Bain, but short of that, I do think it's really important because nobody wants just a numbers person. Enrico used to say, I don't want to hear you just reporting history. Don't give me yesterday's news through the rearview mirror, and Roger would go off. And, it was all about trying to get out in front of things. I think it's one of the hardest things I found as a CFO is especially in high-performance companies, which is most of what I worked in over my career, you got to get way out in front of that train or you get run over every time, especially on big capital decisions, so that you can influence effectively however that decision is going to come out. Because if you don't, you get killed as a staff person. You'll just get run over.
Right. Were you tougher on your CFO, having had been one?
Yeah, probably. Pat Doyle's not here, but I think he would say his first year was a little rough. I had a particular expectation of what I wanted. In the end, Pat turned out to be a world-class CFO and did a great job for us. I think he's on the Sprint board now, but the first year was a little bumpy.
Yeah. You've been asked what keeps smart people from advancing, and one of your answers once was that their ego gets in the way. So my question is, how does that manifest itself? Is it ugly meetings and reputations that spill into other branches of the company?
That's maybe the extreme, Carl. I think a lot of times, you don't listen. Wayne Calloway used to say, God gave you 2 ears and 1 mouth, use them in proportion. And I actually stole the ego point from Wayne because I saw it. In the kinds of companies I worked in, which were sales and marketing oriented, both DirecTV and PepsiCO, culturally, performance, results driven, drive the car fast, you don't always see the scenery. I just think it's interesting to me. I always felt that the best leaders, and now I'm a little bit being contradicted by the White House right now, but the best leaders were like 60% self-confident and 40% humble. And by the way, if you're going to cross industries, I knew going in, I'm going in humble. And I'm not stupid, but the last thing they need to feel is I don't respect them and what they know that I don't know. So I'm going to do a lot of listening. Now, at some point in time, you're going to say we're going in this direction. But I think you got to get that balance right. And the most effective leaders I know, Brian Moynihan, I'm on this board at Bank of America, Tom Falk, Kimberly Clark, Jeff Fettig, Whirlpool, they have exactly that formula. I mean, there's a little bit of kind of keep your feet on the ground. And yet at the same time, you got to set the agenda and you got to drive the organization with a sense of pace. But I just think sometimes we think we've learned it all. Mm-hmm. And I have to say, every time I went out in the field to write a route, to throw overalls on and climb under a house and wire it with a technician at DirecTV or at Pepsi to get into a manufacturing plant or to go out on a route ride and visit stores in the poor areas in India or Brazil, I learned something. I learned something from the front line. And, I think even the Undercover Boss thing, I learned a lot.
Yes.
Doing that from the front line. And it always, I don't know, keeps you humble. My father used to say, everybody puts their pants on one leg at a time. And I think for all of us, as you get to these bigger and bigger jobs, I actually was surprised that the harder I had to work to get real feedback. You better have a good secretary who's not afraid to tell you you're full of...
Yes. You did Undercover Boss, and you answered calls in the call center.
Yep.
You worked with techs on rooftops in, I think, Birmingham.
Yep.
How do you, with so many eyes on you coming into this job, how do you keep that from looking like a gimmick?
I'm not very good at lying, number one. Number two, I was foolish enough not to prepare. Usually I'm pretty good at preparing stuff, Carl. That one, I was so busy. I remember I just had no time. I couldn't get I was going to get in the field and it kept getting canceled. And then you just go out and you got to be natural. I mean, you got to be who you are. I mean, nobody in today's world can fake it. No leader that I know can fake it and be effective. I mean, authenticity in a leader, I think, is pretty important. And so you just got to play the ball as it lies, even if the first guy you start working with is asking about drugs and, he had a drug addiction problem, and I realize, okay, this is why this person's in the show. It's because my son had wrestled with that in high school. Thank God, doing well now. Mm-hmm. But you can't say time out. Let's take a time out and talk about why we're going to ask this question, because once the cameras are rolling on it, it's legit. I mean, the show is legit.
Right. You'd do it again, though. It was a good experience.
I was glad I did it. I'd do it once, and I don't need to do it again. It was a lot of work. It was a lot of work. That was 10 days. But it was really helpful for me from a couple of perspectives. One, think about it this way. You're going into a new business. I got to see how how shows are created, how labor-intensive they are on the media side. I got to see how our organization worked without knowing who I was and didn't work. I mean, I got out in the field. We were launching a new DVR, digital video recorder, and no one had told me we were having inventory problems, and the techs are going nuts because they can't get a box for this home, and they're swapping and calling, and it was chaos. I said, we're going to fix that when I get back to the office. But I think you learn something. What was also helpful to me, I didn't do it with this in mind, Carl, but sometimes you stumble on things that become really leverageable as a CEO from a symbolic and kind of I'm making a statement to the organization. And I had decided we were going to make the customer experience, not just the service part of it, but the whole customer experience much more important at DirecTV. It had always been important. We always said we were better than cable. I said, that's like, being the world's tallest pygmy. I mean, you're just...
Hey,
really,
easy on the cable.
Yeah. Give me a break. So, I said, look, let's look at Amazon, let's look at Zappos, let's look at a bunch of others, let's look at Netflix. How are we going to start to move that meaningfully? And it starts with the front line. And the front line, the technicians, the call center operators, I understood who they were. Partly because at PepsiCO, Frito-Lay route drivers were making about the same amount of money doing a slightly different job, but similar. And it became a really useful message to the organization that kind of flipped the pyramid upside down overnight. Because it just wasn't a priority with my predecessor. He had other priorities and other strengths, but that wasn't. And so it helped me make a statement for the organization, which ended up being terrific. We doubled our Net Promoter Score in the time I was there.
Guys, we have a few minutes left. There's microphones on either side if you have questions. So if you think of one, just let one of the pages know. I did have a question because you've seen in a couple industries now major secular shifts. Which is the bigger one, cord cutting or the change in demand for carbonated beverages?
I thought you were going to say more broadly Amazon and Whole Foods or whatever else.
Yeah.
I mean, gosh, I don't know of a business that's not facing major disruptive change right now. In some cases on multiple fronts. So you got channel change going on with Amazon or the retail industry struggling. You've got massive demographic shift with millennials, urban millennials in particular, who have very different habits. And then you've just got, in the case of food and beverage, eating habit shifts. I guess I would have to say, not because of cord cutting per se, I would say the media and pay TV distribution business probably getting a tougher go because there's more than one thing going on. So it isn't just about millennials who are watching everything, whatever, on their iPad without ads. It's the advertising industries being roiled with change and the role of data. It's the price of the bundle and the bottom 60% of consumers in this country are having a harder time paying $110 a month just for TV. And even on the content side, trying to find compelling content. Even the NFL's ratings are down. Finding compelling content for millennials is proving to be a challenge. It's not impossible. There are some.
But we were talking backstage about what happens to pricing when even a couple new buyers enter the market.
It changed. It changed for the content companies and the cost of content. But it's not because I think it goes the way of I never thought even satellite would go the way of the dinosaur. On the other hand, it wasn't going to be an easy time for the next 5 years because if you think about it from a media company standpoint, you have two sources of revenue. About half of it comes from selling advertising, and about half of it comes from the pay TV distributors in fees. Well, these guys have got cord cutting going on, and so they've got fewer and fewer subs, 1% fewer a year, and pressures on that front. The ad sales, you're competing with Amazon and all of the digital advertising that's shifted already and more continuing to shift. So you're pressured on both fronts. So the whole industry is under tremendous change. I mean, I think carbonated soft drinks is too. But PepsiCo, we redefined ourselves as the total beverage company in 1990, way long ago when we started with Lipton and Aquafina water and then buying Gatorade. So I mean, we got on that journey a lot earlier to try and diversify the portfolio.
Right. Do you see any questions over here? No. Do you see? You mentioned we could have talked about Amazon through grocery and packaged goods. We could talk about Amazon through Amazon Prime and television and video content. Do you see anyone with a legitimate shot at true second mover advantage against them?
Well, I think to the extent you're going to have second movers, they're going to be niche players. What I mean is not as a broad-based. I mean, Walmart's trying with Jet and Walmart.com. I'm not sure they've totally got that formula nailed yet. I think there's no question, though, Carl, it won't be just. I mean, everybody's going to be doing some form of, if you're in the grocery business, distribution to the home. I mean, Stop and Shop's been doing Peapod for years. And I think you'll see more of that. So I think you're not going to see just one answer. You're going to see a whole hybrid set of answers. So there'll be not one competitor, a second mover, or whatever. And then you'll see niche players like Zappos and Shoes or whatever, where they can make a go of it. Mm-hmm. There's a guy doing furniture up in Boston, Nirav, who does a terrific job. But I think those will tend to be more niche players. But boy, I'll tell you, I've been to an Amazon warehouse. It is an impressive thing. I mean, I give Tom Falk at Kimberly-Clark took the whole board. We spent 2 days up in Seattle at Amazon. We got a tour of one of their warehouses and had a fair amount of time talking with the Amazon folks, the execs in charge of grocery, to better understand how the world was changing. And it's a machine. I mean, they've got a juggernaut, without a doubt.
Yeah.
Bezos runs a great...
It's like being on a different planet.
Yeah.
Last question from me. If you're a former CFO, does every board want you on their audit committee? And does
Yes.
that get old?
Yes. Yes and yes. I'm on 3 audit committees and I chair 2 of them, and that's enough. I'm on a bank audit committee. Don't ever do that. No offense, but that's way more work than I thought I was signing up for.
I see my countdown clock getting down to 0. If there are no questions, Mike, thank you for your time. Great having you.
Great.
Mike White.
Thanks, Carl.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.